Hello, welcome back to Commodity Corner for week ending June 13th. And what a week it was. At least the ending of it, huh? So let's get started. I specifically made a video for oil. Link will be in the description. You'll also be at the end. So that would be worth checking out. Oil will not be discussed here because, again, a video was specifically made just for oil. So we're going to start with gasoline. Gasoline, to be honest with you, really, with the exception of what took place on Friday morning or Thursday night, is not telling you anything, meaning it hasn't changed from where it was in terms of sentiment. Now, what do I mean by that? The demand is still an issue. However, obviously, in a conflict, gasoline and heating oil are going to follow crude. You're going to see that happening. However, just in the viewpoint of demand, it's really not changing. So that picture still stays the same. So I'd love to tell you that it's amazing and it's awesome. But the reality is that we're really not going anywhere. And you would expect with the summer driving season that gasoline would be significantly higher. It's not. So just keep that on your radar and understand that the demand is still a problem. Let's move on to heating oil, and we'll some heating oil also, again, with the conflict. This is why it gapped up the way it did. If we just ignore Friday for a minute, we were really just doing nothing. Again, demand is really a problem here. Okay, let's move on to natural gas. Natural gas not doing a whole heck of a lot. It's really a little bit frustrating because you would expect, at least I expected it to be higher already. I expected it already to be in the $4 range. It seems to not want to be there yet. It's very range bound and it's being a little frustrating, but I still believe that we will be in that $4 to $5 range eventually. It's just a question of how do we get there. Right now, we're just kind of stuck. I would not be shocked that we see some kind of gap on a Sunday night or even one night that gets us there. I think that's the way it's going to happen. So I'm keeping it on the radar. Okay. Let's move on to the ag space. Soybeans had a big day on Friday. They're definitely looking like they want this 1080. They're looking good. Soybeans are actually looking really, really nice. This was Friday was a stand up and take notice type of day. A lot of it obviously had to do with WASDE that came out on Thursday. I'll let you do your own research on that. Wheat, I know that it's in a choppy zone, but again, this is a stand up and take notice type of day. And my gut is telling me that we're probably going for this 556, 560 area. This was definitely an igniting type of day. We'll see how this plays out over the course of the next day or two. But as I've always said in the past, commodities have a way of just being very range bound. So we could be just in a range, but I would just keep it on your radar. Corn, really no movement there. It's really not doing anything. I wouldn't waste your time with it. Let's move on to the metals. So let's start with platinum. Wow. I mean, platinum is just, the fun continued this week, right? We hit highs we haven't seen since 2021. The market is very bullish. There's supply issues that are keeping the market up here. The market is incredibly bullish. It looks great. Thursday and Friday had some downside follow through and downside movement. I don't see why this market should fall out of bed. Everything is there. So I definitely see this thing continuing higher, or at least living somewhere between the $1,200 and $1,300 range for next week. Maybe this week it takes a day off and just relax. Silver, interesting. Gap up again. But I'm leaving the gaps on purpose. We gapped up. We broke through these highs over here at 35, and we're holding where we need to. So a build out and a push higher definitely doesn't seem like it would be out of the cards. Gold, obviously, gold on any move is going to, any type of conflict is going to, it's pretty much a no brainer. That's going to happen. What's interesting about gold, at least the spot market closed, if I'm not mistaken, on Friday at a record high. Not the futures, but the spot market. Futures are again hanging out where they need to be. On a conflict, you should expect some kind of push higher. So just keep that up. One thing to keep in mind is that we do have FOMC on Wednesday and a press conference. So there could be a lot of book squaring ahead of it in everything, gold and all the metals. One of the things to keep in mind on your radar is that The Fed will be asked about the conflict in terms of inflation and what their expectations are for rates. So just keep that in the back of your mind. Let's look at copper. Copper not doing a whole heck of a lot. All right, let's move on to our softs. No, a lot of times we'll start with coffee, but before I start, I've said this a few times and it's worth repeating. Commodities are not stocks. They don't break out like that. They don't have that type of upward momentum on price. And if they do, it doesn't usually last very long because there's always a natural seller in commodities versus stocks where there's a natural buyer. Commodities, for the most part, are very range bound for price stability. So let's just look out at coffee. Coffee had an interesting couple of days. I had this big, ginormous move, this big thrust upwards last week. And then this week, it, to a large extent, took it back. And we settled not at the lows of last week, but we settled not far from them. So it's acting as though every other commodity would, where I wouldn't say reverting to the mean, but it's holding where it needs to for right now. And you can see there's like, if I'm just going to use the cursor over here, you can see there's kind of like a base over here or a floor where we stopped. Probably going to be again in some kind of tradable range, but it will be a range as usual. Let's look out at cocoa. I know that it's not the most exciting one, at least not anymore. Once was. The moves are definitely a lot more subdued than they were in the past. However, it is a commodity, so we should talk. Come on, it did have a move to the downside, like we always do. It did have a move down. The market is really just trading in a really ginormous range. It's not tradable, honestly. So, but we're going to bring it up anyway. Let's look at cotton. The one that was the most interesting, to be honest with you, we're going to get to in a minute, was sugar, but we'll get to that in a second. So we're looking at cotton. Let's see what cotton did for the week. Cotton is very, very range bound. It's somewhat tradable, but not the most exciting thing. It's really just not doing anything. I wouldn't tell you to waste your time with it because it's just not going anywhere. The one that was interesting that really broke down was sugar. Sugar, as you can see, sugar really broke down. Sugar got down to a low of 1607 on Friday. So sugar really broke down. Let's just look at a weekly for a quick second, just see it more pronounced. I'll go to the monthly. You can see it really on the weekly. It's not as pronounced. Let's look at the monthly. That's where you really see it. See, it's really breaking through multi-year lows. And then the last but not least is our good friend, frozen concentrated orange juice, or OJ. OJ not really doing anything. Also, you look at the daily, it's really just dead money, sort of like cotton, just dead money. Hopefully this week we'll have something. We'll see. I encourage you to look at the oil market video that I put out. Link will be in the description, as well as I'll have a link here at the end here, just so you could see it. The volatility right now is definitely in oil. So as a trader, you want to go where the volatility is, and that's where you should be. For more detailed analysis, I would look there. Thanks a lot, and I'll see you next week.